Okay, now we are officially recording it right now.
Great.
Okay. At all time, if you guys are not intending to ask any question, please try to keep additional noise, right? Such as like clicking of pens, scratching of the table, or whatever it is to the minimum, because we are recording, so that the record will be clear. Thank you for cooperation. Okay, the charity supermarket right now total outlet is 285 outlet. Is split between two different entities of operation. The charity supermarket itself is 187 shops. Yes. What is the noise on the background? There's some scratching noise.
Yeah, I hear that too. Is it possible? How do you mute?
Right.
Just
Yeah.
like from my end.
I think
Oh,
participant can mute yourself.
Yeah.
On our end, we cannot mute. When we mute, you can't hear us. So all
Am I muted?
No, I can still hear you.
Okay.
We will have a question and answer session after that. When I say, when the CEO say, okay, now we'll throw on the floor for question and answer, then you unmute yourself by the time. Right? Or in case of anything extremely very urgent, you can also unmute yourself and then just assert yourself and say that, hey, hang on, I want to ask this very urgent question before I forget. Okay?
I prefer to take note of the question and answer later. Otherwise, you'll be holding everybody in this session, and well, you won't get what they want. Only one person get the benefit of it. Please take note, then come back to the opening session for answer and question. Then place the question. Then,
in other words, means if you have questions, right? If you can hold on, please note it down so that you can ask by the end of the session. Okay, so the charity supermarket is divided in two prongs. One prong is the charity supermarket itself. Another one is a recent development, okay, called the 24 hours unmanned convenient kiosk. Now, this development started is because we are facing competition from Jack Ma and few other players that has also recently ventured into the venture into the supermarket industry. Right, so we have our alternative ways of dealing with them, but these alternative ways of dealing with them, we have to set up a different branch of business called the 24 hours unmanned convenient kiosk, which also requires significant capital injection. So today we're going to spell all these things out and give you guys a clarity of exactly what happened. Now, before we go into the figures, CEO will be playing some video clips as well as some photographs to show the development of the charity supermarket, and also will give you the locations. That means there are 100 over branches in Beijing, some in Shenzhen, and so on. They are all on the map. You can click on the map, and all the branches have an address. Another word means if you get to China and you just click on the map, based on the address, you can literally visit the individual outlet. So I shall right now pass the microphone to Henry. And Henry will be giving you the presentation right now.
Okay, good evening, ladies and gentlemen. Okay, I shall begin with showing you the progress of the supermarket by some photo and slide and video. So let me progress from here. Okay. Oh, well, we actually, beside our current store that we have enrolled two other investors into this program because we need to speed up our development to counter the others competitor that originally they are not supermarket player, but they are IT people. But now because the technology development warrant them to come into the supermarket industry. So we are facing a different kind of challenge. So, but we have our countermeasure by enrolling more people, more investors, and more talent to act upon a countermeasure. So that's why we want to establish 1,000 shops by the first quarter of 2019, so to achieve a P ratio of 7 times with the public listing. Our public listing, I will explain to you later how we go about to do the public listing and how do we achieve this target. Okay. Let me begin showing you. This is one of the shop. There are many shops in the China, but there's one of the shops opening, and I can't be showing you all the shops, so I just take one of the shop to show you. Can you guys see this?
Yeah, they can.
Yep.
Okay, so this is the opening of one of the shop, and I shall move on to the other activity. Besides selling product in the shop, the charity supermarket have many functions. One of the function is to collect charitable product and give to the poor, but there are also other events that help the supermarket to generate fund to go on with the business and help the poor as well as help the investor. Okay, let me move on. Okay, this is one of the media report by CD News. Okay. The video is not moving.
Yeah.
Somehow, okay. I think maybe the bandwidth is wrong. I'm sorry about this. Today, this one is supposed to the video we play it was okay just now, but couldn't show you some of the charity. What I have in here is they are having some charity free market.
I think there's a lot of people in the chat room right now. So is the combination of it is taking up too much bandwidth. So when we begin to show the video don't seems to be moving. What we can do is after the session, we give you the pointed address and you guys go and take a look at the video itself. Okay. Now the charity supermarket also involve the flea market. The flea market is also our monopoly. Every month, this is called the flea market. Every month, fortnightly, 2 weeks one time, we can conduct our business outside of the area of the charity supermarket for free. That means we can expand the area. We can also build up kiosks and we can charge rental for the kiosks for people and residents who want to participate in selling their old stuff. Some of the proceeds will be donated to charity. Some of the proceeds will be taken as profit for the charity supermarket. So this is the flea market. Okay. So the video we will point to, we will give you the link and you guys can go take a look subsequently.
Okay, I'll move on. This is one of the shop charity supermarket that we have developed in Shenzhen. This is the renovation. We have several type of supermarket. This is one of them that we revamp it, 100% revamp on the renovation and start anew. There are some shops that are quite new. We just take over as it is. So, okay. Here are the app of the supermarket. In China, especially all this daily use product, we rather put it on the app and let it download because the app go with them when they carry the handphone moving around. So it's much more convenient. So the Chinese, the habit is using the app to order things that they from internet more so than they do on the website. So especially all the daily product, they know the product very well. So for their convenience, so they use the app rather than the internet website to do it.
Okay, on the right hand side, so this is the app itself. I'll go back to one chart. Okay, I just look at the app. On the right hand side, although you don't understand Chinese, but never mind. On the left hand side, okay, it is the format and the interface of the app. Okay, you can choose the categories of products that you want. You can choose the location of the place of the charity supermarket, so on and so forth to order your products. On the right hand side is some sample of once when you get into the app, so what are the category of products is available for your choosing and purchase.
Okay, this is an enlargement of what you see earlier on the left hand side. On the very left hand side, this button actually, when you click on this, it will lead you to the various shop. There are shop all over the place from Zhengzhou, from Guangdong, from Beijing. So I just show you some of them. When you click on this button, you bring you to a location of the shop. There's the middle of Beijing. So this shop is in the Zhengzhou Shi Qici Zhong. It's a place of China. Okay, so well, there are every one of this link leads you to one of the shop. Okay, so there are so many link over here that each one will link you to one of the shop. Okay, so I move on to show you. Okay, this is one of the typical setup of the convenience store, 24-hour unmanned convenience store. Pretty sophisticated. When you walk in, the first time you go in, you register yourself using face recognition. Thereafter, you do not, when you go in, you do not have to check in at all. In fact, the moment the camera spotted you, they know they registered your presence. And when you bring something out of the store, they actually have sensor to sense what you have brought out. And the payment is, you do not have to stop at the counter like a convenience store or supermarket. You just check out. The moment they pass through the sensor record what you have taken out. And China have this payment portal called Taobao or Zhifubao. It's a online payment portal that everybody use it every day for almost everything. More so than they're using the bank credit card. So when you move out of the shop, they would automatically deduct the amount, and if you place the order, and the order you can also specify the order to be sent to you within a few hours, about 4 hours. So this is super convenient in China to order from this type of 24 hours convenience store. That is the reason why we have to include a business module as the unmanned supermarket to be added into as one of the business module, because right from the beginning when we plan off as a charity supermarket, our cutting edge is on the free rental, and also we are doing charity, so people support the charity supermarket because it belongs to the people. And secondly, because the free rental give an advantage of this daily product that they need every day, we can offer them at the best price that nobody else can offer. But now, beside the price, lifestyle is another issue that we have to take care of. When they go, they set up unmanned supermarket, there are also advantage on cost, because unmanned meaning there's no manpower involved. So in order for us to maintain our cutting edge, we have to develop the second sector, which is a mixture of supermarket and unmanned market, so that we can serve the population and lifestyle as well as give them a better price offer. So let's move on to the next thing. Okay, this is some of the charges. I'm sure everybody is excited to know your investment. How is your investment performing now? Let me just, and is the supermarket going to go on target, and are they going to be listed, and how much you're going to make out of it? Okay, let me begin with this phase one. Okay, phase one is the time when we first started the supermarket, and our target at that time was the first year we're going to build 150 store. 150 store. Okay. No, I point only have. So okay, so we begin with this is our, you see here, founder investment, our investment. Ours mean representing collectively all our member and JOS. Okay, so we have the JOS as a whole, as a company, we bought 1.45 million share, and we sell this share to our member. Okay, so we begin with a capital of about $4 million, and our value of our share at that moment is indicated in the yellow box. Okay, And with that fund that we have for over million, we have started off by setting up store in China, Shenzhen and Guangzhou to begin with, and in Beijing, 101 store that we took over. So far with the fund, we have actually sufficient to do up 73 store, because each store itself costs 55,000 renovation and the stocking up of the store. So each store will cost us to 55,000 capital outlay to build one store. So with the $4 million, we have sufficient fund to build only 73, not 150. But how are we going to achieve the 150? Is by having the income. This is the next chart here is showing 147,000 because averagely every store, this is the income we receive every year, and the profit margin is about 20%. So we generate about $29,000 every store, and with 73 store, we have about $2.15 million. So with this, we invest into this whole operation to build up the other store. So number of store in operation by the time we develop with this fund, which will have 113, and yet this 130 does not meet with our target of 150, which the government actually have indeed us to perform. So of course there's two ways. One way is to enroll more fund. Another way to take a little bit more time using the income of the store to reinvest into it. Okay, so I'll move on. I will not explain the rest of the two charts because I want you to have an understanding of the development before I do a comparison of when is the best time for us to exit and liquidate our share to cash out. Okay, this phase two. Phase two began with about end of 2017 last year. So we find that there are impact from others IT company who come out and set up store, more unmanned store. So to speed up the whole process, actually we have brought in an investor that pump in about $6.25 million. All this figure I'm mentioning here are US dollars. Okay, so with the input of the capital plus the capital that we we're having before, so we are able to use the fund to build up more store. So at the current, at this up to date, we have 187 store in operation. These are charity supermarket. Okay, so with again the same principle apply with 187 store with the charity supermarket average income. So we are anticipating that this is the amount that we will achieve when all the stores are fully in operation. Some because we are building a store in stage, not all the stores are in operation. So all this figure every day is dynamic. So we cannot be giving you the 100% accurate right up to this minute. But all these are daily or the other money update. So with this fund, we can actually build up with the input of the investor plus the fund that we self-generated. We can actually build out to 401 store with this fund altogether. Okay, I will still explain about the profit and net profit and valuation later on. Okay, please pardon me because I have a purpose why I want you to understand the progress. We need to do that because the valuation of the supermarket, there are two valuation. One valuation is called the internal valuation, that angel investor like us come in with a very early stage. We see the potential of the supermarket. The supermarket have not started a single store, but we put in the money. There's no income. We still put in the money because we realize with the condition that given to us, the government support, the charity banner, we're going to make profit, and as more so we got the monopoly right. So we see the potential. So we are angel investor. So we dare to come in. So you see what happened during the second phase, when we enroll the 6.25 million, the investor are not buying at what we are buying. The investor at this phase are buying at 660 per share. Well, when we enroll, we cannot on par with the founder, but we got a good rate discount at 2.8 RMB.
1 second. Just 1 second. You don't click. When you stop a figure, you roll over and move.
Okay. So the investor are buying at this value. You see, when there's a transaction, a firm transaction done, then that is the value of the market established price. So in other words, our value from 280 have increased to 660 because they are investors, they are people buying into this price. Okay, so but they hold 20% of this share. Our percentage of share have been diluted from, I just click, I roll back to the previous one, you will see 6. Okay, we hold initially beside the founder holding 93.75%. We came in, we hold 6.25%. But also, let's look at the absolute value. Our value at the time is only 600 over 1,000. Okay, but look at this. We holding less share. We holding number of share is the same, remain 1.45 million, but our absolute value went up. The reason is because we are valuing at the transacted price of 660. So another two figure that I want you to look at in the green box. There's one green box here and one green box at the bottom. What's the difference of this? The green box on the top, this is the value that is established value. That means there is transacted price. There are taker who want to take at 660. So with so many share in the company issue, or the company make out so many share at 660. So this is the established price that they are investor willing to buy. They are angel investor, but the valuation at the bottom here is different from the 30,000, same amount of share. Why is it a different? The reason is because this is assuming that we go for IPO, and the IPO will value us not according to how much money we put into the store or how much money the angel investor willing to put in. Because when you set up a store, let's say you spend 200,000 set up a store, if the store fail, then you get nothing at all. So for institutional investor who invest in the IPO market, they will look at the performance. So there is one way of calculation. It's not based on a negotiation like the angel investor negotiate with the founder, but here there is an official way of calculating it based on, it's called PE ratio, price over earning. That means, let's say I pay $1 to establish this as a supermarket, and I get back $1 at the end of the year. That means I earn $1. Well, if you want to buy me out, I will not sell you at $1. I will sell you as a P ratio of a negotiated multiple. Meaning, I say my P ratio is $5. So these are market norm, especially the charts that we sent you before, the example of some market player establish how many times of the PE ratio over there. So the PE ratio I will not explain in too much detail, but let's say if we go IPO at this stage, our valuation will only be $19,000 or $19 million instead of $30 million. Is this $30 million a mistake? It's not, because there are people already accepting at 660. If we have more investors coming in, everybody paying this is the value that we establish. Okay, but this is something that we're assuming that we go on IPO. So the IPO value will be evaluated by the PE ratio. There are a few other methods to evaluate, but we're concentrating on the PE ratio. This is one of the more acceptable norm in the market. So we'll look at the chart on the right hand side, this blue and red. So we'll work out if we're going to liquidate our share at this stage and going for IPO, our share will not be treasured. That means the institutional investor in the IPO market will only value us as 60 cents, okay, for $1. But for the angel investor, they will value us at 103.
So it is the best time to liquidate. It looks like it's not. So what is the next phase, and how can we appreciate the value? Well, we have projected value of 300% earning when we discuss with you, promote this share. But here it looks like the value have dropped or on par. Well, not worry. There's a reason why we have to do all the exercise like bringing in the investor, and just follow me to the next page. I'll explain to you in detail. Okay, this is phase 3. Okay, phase 3. In phase 3, we have enrolled another investor, angel investor, putting in almost $11 million at this phase. Okay, what is this money for, and what we're going to use this money for? We're going to use this to establish more store, because we have more store, we will have more income. When we have more income, the PE ratio will be higher. So look at this stage, the investor actually come to buy in at 9 RMB. Okay, 9 RMB is, which is 14 9 RMB, about 1.4 US dollars. Okay, so well, our share again diluted, but you remember just now the absolute value, the stock in hand that we have is 1.6 mil, now went up to 2 mil, $2.03 million. Okay, no doubt our share dilute, but because someone is already established at this stage, the value per share is 9 RMB. So
one point today, guys, please do not be worried about our shares dilution. Please look at the yellow figure on the right hand side. Look at the absolute gain. The absolute gain is the most tangible thing, not the percentage in terms of our share, whether appreciation or dilution. You can hold 100% share of a company that is not making money, your absolute value is equal to nothing. If you hold 1% share of a company that's making a lot of money, your absolute value is something. So look at the absolute value.
okay, with the input of almost $11 million, we actually have set up these two operations. Half of the amount went into the charity supermarket to establish more store. Together with the income that we generated here, okay, we are able to set up 1,100 store, which is our target, 1,000 store by the fourth quarter of second year. And looking at the amount of store that we have increased, 588 by this projection, our accumulated income are higher, and the PE ratio are basing on exactly what we want to increase this. The gross profit margin after gross, the PE ratio is based on the net. So after tax, so this is the net profit margin times 7 times PE ratio. This is $84 million. Now the interesting part is, now you're looking at the figure here is a valuation, or let's say we're going for IPO at this stage, $84 million. But now come back to this box at the top right hand corner, the green box. Now we have only $52 million. Why is it lower than the institutional investor are willing to accept as the valuation value? Because this is the institutional, and this is the common practice. The professional practice, the professional evaluator will come in and they look at how much income you have and multiply by the norm, the market norm at this stage. Let's say this is 7 times. In fact, the supermarket can go as high as 15 times. We are doing a conservative estimation at this moment. Say by 7 times, we already have $84 million. Instead of, if we based on the angel investor willingness to accept this, they only accept at this amount.
Just to add to what CEO say, in other words is, at phase 3, if we take a look on the top chart, you can see our internal evaluation is only 52 million. That 52 million means if we are going to raise funds privately through our solicitation of private investors, the private investors is only going to evaluate us at 52 million. But because we already have enough stores and build up a sales volume, that sales volume based on the market norm by professional evaluators at a stock exchange is going to evaluate us at 84 million. So on the previous chart, phase 2, take a look. Let's go back to phase 2. Take a look. Phase 2, backward. No. Okay, take a look at phase 2. Phase 2, on the top side, we are only internally is 30 million. Then at the bottom side, externally, the stock market only evaluate us as 19 million. Why? Because of the number of stores that we have, which is very low, and unable to generate a sizable income. So private investors is willing to invest in us based on our possibility of future expansion and based on the prospect. But professional investors in the public will estimate us very low because professional investors in the public, in the stock exchange, evaluate us on pro forma. That means if your sales volume is so low, then I evaluate low. So they have a diagonally different mindset from angel investors. Angel investors buy future. Public investors, okay, or professional public investors buy performer. They see a company, make sure it's secure, it's performing, and then we buy. So at phase 2, the public evaluation is 19 million only. At this stage, if you go on IPO, we will not be making money. So let's go to phase 3. So let's take a look at phase 3 right now. What happened? When phase 3 comes, when we develop more shops by getting in the angel investors again to pump in another $11 million in order for us to build up another to about 1,100 shops. Straight away, you can see that the public evaluators from a stock exchange evaluate us at 84 million, which is now higher than our internal evaluation at 52 million. At this stage, we can go public listing. I pass back the microphone to Henry.
So now looking at the value of the share, okay, well, at this stage, internally we are valued at 1.406, meaning you invest $1. Now, internally is 1.40. If we go IPO at this stage, our share will be 2.288. Okay, this is the difference when we manage to get our profitability to demonstrate to the institutional investor, then the professional evaluator were able to come in and evaluate according to the market rate. The difference between the angel investor and institutional investor is angel investor is usually know the founder. Like us, we know our Mr. Lee and his group, so we know what the capability of these people can do, whether they are trustworthy, whether they have the ability to bring this business to the footness. But institutional investor is very straightforward. We have money, we want to invest, we want a professional team to come in to give us the evaluation. The professional team will only based on your performer and not based on a trust or ability of a person. Okay, the next phase will be the fourth phase. The fourth phase will be the first quarter of next year. So this is the phase that really make a quantum leap. Look at, well, our evaluation in the first phase is 600 over 1,000, but here, internally, our value already worth so much. But basing on the amount of income, because now we're going to have 2 stores. From phase 3 onward, you can see there's another box of unmanned convenience store. So by phase 3, half of the investment go to Treasury Supermarket, half of it go to the unmanned store. So we have another extra sources of income from the unmanned superstore. Okay, actually, unmanned superstore we calculate is slightly higher than even the Charity Supermarket, about 22% versus 20% for Charity Supermarket. So this is added revenue to the whole group. So this plus this and our valuation higher because of the valuation, the income increase. Okay, so our share can be now the previous stage, our share is only 1.16, but now if we go IPO at this stage, our share is going to be like $7. So from instead of only $1.4 or $2 dollars, $2.2, now at this stage we can go up to almost $7. Okay. So okay, I think sorry. So this is I have a long meeting. In fact, quite a lengthy meeting with our group in China, and we have actually gone through many options and how best we can do it, and especially with the new investor. You see, when the new investor come in, we need them to come in because we have a situation that we are facing a rapid growth of our competitor. The IT industry are moving into also supermarket. So that is something that we don't anticipate before. But one thing happened, we have to act upon it fast and find a solution to counteract it and maintain our monopoly. So these are the things that we have done. But the investor that come in have gave us one condition is we are not allowed to exit at the moment because we need every resources to build up this supermarket and the unmanned store speedily within a very short period. A few reasons, because each store that we located at the strategic location, that means we display our competitor from occupying a location, vice versa. I mean, if they have occupied a strategical location, then we have no chance to move in. So this is one reason that we had to move very fast.
I think let me sorry, Henry, let me just add this. Business is not just about timing, but business is also about speed. Now on one end, we are facing competition that is not expected because nobody expected that the IT industry will suddenly become interested in the supermarket industry. Simply because there's a synergy. The synergy is I'm able to use IT to make sure that all supermarket becomes smart, become unmanned. Unmanned means smart. And reduce manpower. Reduce manpower means increased profitability. So Jack Ma and the group, Tencent, Tencent, it's called Tencent. All these are all big giant group with multi-billion dollars. They can move at a very fast speed because of high capital. So they are moving on. But on our side, our parties are endorsed by the Chinese government. We have free renters for all outlets that we want to open up. So this is our plus sign. But we are also a commercial entity because we have to make money. And the China government agreed that we have to make money because if we make money, their charity is done with a very perpetual continuity. So we have to take a look at a business perspective. That's why we're willing to dilute our shares. That's why we're willing to get third phase investors come in at $7 million. Fourth phase investors come in to inject another 11, then plus 11, total $22 million USD. Because without this capital injection, we cannot speedily reach up to the target of 1,100 over store. Half is charity supermarket, half is the 24 hours unmanned store. But if we have this cash, we're able to reach up to that 1,100 store and create the sales and profit volume so that the stock exchange, when they evaluate us, they can evaluate us at a very good standing called the PE ratio, based on the PE ratio. That will be time that we exit. The time that exit, supposing at the beginning stage when you have bought, say, $1, that stage that we exit, you can exit at $7. Means we will sell at $7. Means it's a 700%. But this 700% is based on conservative estimation because the norm of supermarket can go 14 times. but we do not want to take the 14 times. We just want to be much more conservative. The rest are bonus. So this is the situation. Why are we a little slower? We're a little slower because of unexpected competition. Why are we diluting our share? We dilute our share because we need investors. But look at the absolute figure after we dilute our shares, we are still making a lot. So this is the focus. That's why CEO has spent nearly 3 weeks in China. The reason is because there's many things to readjust, many things to discuss, and many things to agree. Because while we are not major partner, but we are still not a small partner because we subscribe to 1.4 million shares. We are not a small partner. So this is my thought of it, how it is. So I'll pass back the mic to CEO.
I know many of us, when we first begin to invest in this project, there are some expectation like 300% to 500% appreciation, and also within a time frame of about 18 months. So the 18 months is already due. Now it's an 18-month time. But because of what I present to you earlier, all the criteria and all the challenge that we are facing and the strategy that we adopt to overcome this problem that we're facing, we find that it's the best to optimize the profit for all of us is to hold on for another, say, maybe another 9 months to achieve the target in 2019. So we are actually at this stage now, the phase 2. This is the current situation. But looking at the value that if we're going to go IPO, because we face a lot of challenge, we had to put a lot of money into building the supermarket, but we cannot put out the high PE ratio without the supermarket established. So we know, in fact, beginning we know we are slow. We thought we have time to use the profit margin that we gain and profit back, but that initially we were slow, and after some time we get the momentum when we move on. But the situation doesn't warrant us to do that anymore, so we had to change it. And when we invite new investors, so the condition that new investors say, guys, we all need to put our fund together. So initially, we did propose that we will sell 20% of the stock we hold in hand. Okay, that means instead of issuing new share to the investor, we are actually not increasing the share allocation. That's what we propose. We sell 20% of our share to the investor so that we can exceed. If we have a 5-time appreciation and we sell 20%, that means we get back our capital. But now the situation doesn't permit us to do this because the investor condition is you guys also have to put all your effort, do your best to make this happen. So there's the reason why we are not unable to sell all share to the investor to liquidate. So now there are only a few options over here. I'm sure everybody have a different financial background and situation and you encounter now. So we're looking at a few options. Okay, this is the option. Okay, so either if we are have the ability to hold, then I think we reap a full reward.
The ability to hold is to make sure until the 4th phase where we have 1,100 outlet, where the PE ratio is vetted at 7 times. That means if anybody that has invested 100,000, they'll get back 700,000. Anybody invested 10,000, they get back 70,000. All right. So that will be March. That will be March 2019 to get 1,100 short. So it's just take note is 7 times, no longer 3 times. On phase 3 that we exit, which the investors don't want us to exit, because don't forget, you buy per share at RMB 330. When the investors come in, when we sell them a new share, the investors literally buy our shares at $9. Is it $9, Henry? $9. Yeah, so it's nearly 3 times more than you have paid. So if we right now go for public listing on phase 3, we will gain something, but the new investors will not gain anything. But the new investors has agreed and has just injected 11 millions, and another 11 more millions to go for speedy development. If we do not listen to their term, they will not inject the funds. If they don't inject the funds, we will not be able to achieve our 1,100 outlet in order to get our 7 times return. So we are not caught. I don't use the word caught in a situation. The situation evolved. We look for the best option in order to benefit all investors like ourselves, benefit the project, also benefit the new investors. So let's go back to the option again. Okay. So if you wait for the IPO, at every $1 that you invest, by 2019 first quarter, we definitely go IPO, because by then we have built 1,100 outlet, and the PE ratio will be 7 times. Means $1 you invest becomes $7 as return profit. The second option will be this. I'll pass back the mic to the CEO.
The second option that we understand, not everybody are willing to go whole, or some people have budget problem, or they already have a certain allocation for this money to be used somewhere else. So we can understand that. So the second option is the company, I mean we, George, will buy back your share, dollars, plus 10% for those that already hold on for 12 months as a token of appreciation that you participated, and it's not the full potential of the share, but we cannot be paying you the appreciated price because we have not liquidated the share that we have in hand also. So the money have to come from the financial capital market. Eventually, when you go IPO, then you get the multiple appreciation. But at this moment, it's a private settlement. Mean we come up with money from elsewhere from our business. We have invested in other business that we have to get the money back and pay you guys first before we receive the money eventually from the capital market when they go IPO.
Another word means the second option is the company buyback. Means before the shares become mature at PE ratio of 7 times, which will make a lot of money, which will be the first quarter of 2019. So that means we are not receiving any money from the stock exchange yet because we haven't sold our share. But we will buy back with company funds. The company is happy to do that in a sense because we are confident that it is going to happen. So buying back shares to the company means enriching the company. Buying back the shares, the company means from the members means the members that cannot wait will lose an opportunity. But buying back from the members means the company will gain back the opportunity. All right. And also because of the duration of waiting for those who have invested more than 12 months, we will also take it upon ourselves, not that it's compulsory, not that it is by law that we have to do it. It's by grace that we do it. We're going to add another 10%. Means if you have invested, say, 10,000, we're going to give you $11,000, okay, as a return. That means you will have nothing to do with these shares anymore because you have sold the share back to the company. Means by the first quarter of 2019, when the company makes 7 times, it really has nothing to do with you anymore. So this must be very clear. I sound a little bit harsh, but all these things has to be very, very clear because this is business. Okay.
The third option here is, well, if you think you have been holding on and your value of the share of value of your share is higher. Yeah, in fact, all of us agree that the value of the share is higher, and you are in need of cash. There's another option is if you can have an investor that are interested with this project and they want to buy over, we can facilitate that. And the price of the share that you sell is up to the individual negotiation. That means we don't involve with the negotiation or limit your price that you sell to your investor. Whatever price your investor willing to buy, you can have that as a final.
My personal advice will be this. If you take up option 3, do not forget you buy the shares at a very good value at RMB 3.3. Okay, 3.3 China dollar at that time. And because that the evaluation is going very high because of repeat capital injection. Repeat capital injection of 22 millions assure that the project is able to go through and pull through and build the 1,100 stalls for the PE evaluation of 7 times. So therefore, at this present moment, the potential of company to reach success become even higher than before because of capital injection. I would suggest that you do not sell your shares if you have a buyer at 3.3. I would suggest that you sell your share above $4, but below $5. Above 4, but below 5. So that you not only liquidate it, but you also get to make some money in the process. If you are thinking this way, right? How we facilitate it, that means is when you get a buyer, give us a call. We will explain the business to the buyer, so the buyer will take the study from us, so that he can consider for himself to buy the share. That means he's aware of what he's investing, so that it be a clean transaction rather than keeping the investors in the dark. So in this way, you can also sell. So there's 3 options. One option is to wait 1,100 shop, PE ratio 7 times. That means you're making 700%. First quarter 2019. Cannot wait. Company buy back your share, pay you 10% if you have invested more than 12 months. Those below 12 months, no 10%. We just return you your capital sum. Those who are really very urgent, sell it to friends, sell it to other investors, but sell it above $4. So these are the 3 options that any of us can consider.
Okay, so this is the information that I like to pass on to you, and now I open up for discussion.
Right, guys, can you please unmute yourself right now so that you can we can engage in a dialogue, so that you have questions you can ask the CEO.
Yeah, I have a question. So March 2019 comes along, and say there's another unexpected issue. Whatever, we don't know, because we didn't know about this one. So what happens then? Does this have a potential to keep going on like this, being postponed, our realization of any profit from this? What happens? What kind of guarantee?
Kara, I understand your concern. In fact, we are on the same boat also. I'm not on the other side of the fence. We are on the same side of the fence. I invested as well as investing. In fact, I invested the money first and subscribed to the share, and then I transfer the share and get back the money from you for what I have paid for. So I also very eager, but of course I know the group better because I mean personally in touch with them and know what they do. I went up to see it. So, but one thing I can tell you for sure is just like this exercise at this stage, the worst scenario is as JOS, as a company, we are willing to buy back. And well, I will look at the situation, and we are willing even at 10%. This money comes from our pocket. We have not made the money at this stage. In paper, yes, I believe I will make that money. And what will happen by then? Well, always there is something that unexpected. So that is business, that's investment. I cannot guarantee that nothing will happen because their policy change. Just like now, China having a trade war, maybe with America, things could happen. Policy could change. So I cannot say I guarantee, but we are quite sure that the charities supermarket and the unmanned supermarket, the asset are there. The business is a very a daily business. It's the primary business that everybody had to eat. Whether there's a trade war, whether there's unless there's a really all warfare, then World War III. Then I think our money will have gone down the drain. I think not only our money but everybody else. But other than that, we are doing investing in a very safe business. This is also a basic need of the person that nobody can live without. So
I believe business will go on. In fact, statistics show every recession, people buy more from grocery shop. They will die out less. So I understand your concern, but only thing that I think we can come in to help is we will buy back the share.
So you'll still in another year, you still just offer. So we would be selling it then, or you would be buying it back for the same exact amount that we're talking about right now, even if we wait another year. So for the people who can't wait, like I can wait, it's not a problem, and I believe in your project, so I'm fine to wait. But the people who are feeling the squeeze, if they then push it and say, okay, I'll wait another year, in another year they still just only get the same amount that you're offering now.
Carolyn, I'd like to answer you. Okay, Master Ko here. Okay. My suggestion is this way. Do not wear a hat that is beyond the size of your head. You have a big head, therefore you can wear a big hat. People with a small head don't wear a big hat. Those who cannot wait, please don't wait until 2019. Those who cannot wait, you have to consider the evil of losing an opportunity. Yes, it's very painful to lose an opportunity. But then again, the camel needs to drink today. The camel have to drink today. The camel, although can tolerate very high threshold, has got very high threshold for the lack of water, but the camel cannot go without water for 30 days. So you know you cannot last for 30 days. And if 30 days is up, you know that you can also see the oasis. But you do not have 30 days. You need water right now. You have to liquidate. You have to liquidate. This is always my advice to anybody that invests. You either can afford.
Yeah. Sorry, the answer to my question then is yes, they will just get 10%.
They will. The 10% is not a compulsory, meaning that this 10% is upon board meetings of Josh. Okay, nothing to do with stock exchange, nothing to do with Mei Yue Tao. The Josh board meeting. Josh board meeting is not only just a CEO. Involve the chairman, involve several other directors that you guys are not aware of. They are passive directors. We come to a conclusion that we want to extend some grace. That's why we throw in the 10%. The 10% is from our pocket. It's not from anywhere. It's not from the stock exchange or from China. It's from our pocket. Now, do not forget, as when we sell you the share. Okay, you do not buy the share directly from us too. You buy the share through a member of ours, which is so-called your upline. Now, during the process, your upline has also made 10%. Now, that 10% comes from where? The 10% also comes from the company. These are the money that we will never get back as a company. These are the money that the personal individual upline make pure profit. And we will never get back all these things. These are all by grace.
Okay, so I think I understand the answer to my question. Thanks.
Okay, all right. So we will play fair. All of us want to prosper. This is human nature. Not a single human being with the intention to live on doesn't want to prosper. Me too, although I think that I have, if I be prudent, I have enough for the rest of my life. But I too also want to prosper slightly more to make myself even slightly more comfortable. This is true. So that's why we provide 3 options. 3 options is based on the person. If the person can wait like yourself, of course, option 1 is the best option. If people cannot wait, they might also consider, well, maybe I should liquidate partial, not liquidate full. That means I will wait. I have invested maybe say 50,000. But I'm in an urgent need of 20,000 right now. Maybe I should sell 20,000 and I still keep 30,000 so that all my effort of waiting for such a long period of time doesn't go to waste. Because
that's good to make that distinction, because I didn't, maybe I was out, I had to leave. I didn't hear that part. That's really nice. Thanks.
Right. You're most welcome. Okay. So we have 3 options. These 3 options are created basically for different people at different category of affordability.
Mhm.
We have all the, there's no such thing as called a higher being or lower human being. We just happen to be at a different phase of life with different affordability level. Okay, so I understand where you're coming from. Okay, so
Thank you. I do have another question. Can I ask? And sorry if I'm showing some ignorance here, but
no
in
worries.
terms of, let's say the best scenario did happen, and that in March of 2019,
Mhm.
we were able to receive
Yeah,
some
windfall. Mm.
good benefit, like you
Yep.
said, perhaps
Mm.
7 times
Yeah.
our investment.
Yeah.
Would that be considered a buyout of our stock then, and we
Yes.
would no longer have any stock?
Okay, very good question. This will be a foresight question. You, at the time, it's called friction. You can totally liquidate all your shares, but if you still have confidence in the company for progressing further, you can also liquidate half or whatever that you want to liquidate, and keep a certain percentage as a stockholder, as a stakeholder, right? CEO would like to elaborate on this. Just 1 second.
You see, when you go IPO, the shares are traded in the stock market. I mean, no longer as a private equity. So you don't have to go through me or go through anybody. As long as you have the share under your name, you can trade it as a stock exchange. So there's
I
no
see.
limitation or restriction on how much you're going to liquidate or how much you're going to buy or at that stage. So at this moment, because we are still in private equity, yeah, we are raising fund, but all these are private round of raising fund. So there is not on a public platform that we can freely trade at the moment at that time. Of course, when you freely trade, you can trade it online or you can trade it with a broker. That is more freedom to do the trading at that stage.
Does
Okay.
that answer your question, Carolyn?
Thank you. Yes, it did. Thank you.
Okay. Anybody else has got a question for CEO or myself? Jada?
Yeah, I was just going to ask about, does it mean right now we are currently on a phase 2 and we
We're
already
currently,
have the phase
technically, we're currently on 2.5. Reason is because
2.5?
the new investors entered into it and have just injected another 7 million, right? 7 million. So we are able to now have the cash to really quickly speed up the unmanned supermarket to make sure that we give Jack Ma, that means Jack Ma doesn't, cannot get a monopoly of us. Okay, so we're at 2.5 right now. Okay, by the time when we
Okay.
go on the stage 3, we actually can go public listing. But it will not be agreeable on the shareholder. Okay, let me explain to you.
I know.
Okay, just one more time. Do you understand it? Do you
I do
understand?
understand that part. I do
Okay,
understand
you
that
understand?
part.
I will
What I
not
meant
explain. Yeah, so that I will not be sound like a like old record. Okay, yeah.
I
So
just want to know,
fine.
we
Okay,
already
guys,
have
let me
that.
yeah. Sorry, go ahead.
We already have that guaranteed investors for the phase 3 and 4.
Yes, phase 3 and 4. In fact, the guaranteed investors is already pump up 7 million upfront already. Okay.
Okay.
Okay. Let me put this way. This whole entire thing is extremely healthy. It's just that the unexpected portion, okay, of our entire business strategy is Jack Ma and Tencent, Tencent. The Chinese name is called Tencent. Then they translate into Tencent. Okay, Tencent sounds very good, but when they translate into Tencent, it sounds very poor because it's only 10 cents. Okay, all right. Tencent become 10 cents. Sounds poor. All right. Tencent, these are all giant players. Tencent owns half of Hong Kong Telecom. Half of it. Okay. All these players suddenly realize that their IT technology is able to convenient everybody on the retail level. So they suddenly got the kind of creativity and also the greed. No? I must say businessmen have some level of greed to venture into the retail and supermarket, and not just supermarket, they're also venturing into unmanned retail, not just supermarket. Okay, clothing stores. I heard this is what they're going to do. The next will be fashion, unmanned fashion. Okay, this gives us a little bit of a shock, that we didn't expect them to do that. But our Chinese partners are very diligent Because straight away when that happened, they did not deny it and say and tell us, oh, everything is good and everything is fine. They call us immediately and say, hey, look, there is this movement happening. We are meeting right now to think of countermeasure. The first 3 months, they thought of nothing because there's really, they don't know what to do yet. So we received nothing. But the moment once when they have the strategy is to, oh, we're going to create our own level of 24 hours unmanned supermarket, but we need more capital injection. Straight away, they call us, particularly the CEO, less me, okay? Straight away, they call us for online meeting after online meeting and make sure we get it, okay? And then CEO also fly down several times. The last time was just April, the longest one, nearly 3 weeks, 20 days. Okay, understand this whole thing. That's why we are able to converse with you right now, because we have the exact real data and also the exact direction already. Now, just 2 weeks ago, we still cannot communicate with you. I apologize for lateness. Reason because we have not received the exact direction. That's why we cannot communicate. Okay, so Jada, you're right that we are right now at 2.5. By the time when we reaches 3, we really have the ability to go on public listing. Okay, ability. But that time when we get public listed, all investors like us, you are part of it, we will get 2.5 times to 3 times. But the new investors, which we offer them new shares, will get 0 because they bought it at 9 RMB per share. So they will not allow us to invest. This is the situation. Okay. Agnes, any question for me? Agnes?
Yes, no, I'm good. I'm just listening. It's all making sense.
Okay, good. Angelo?
Yeah, I have a question.
Okay, for me or for CEO?
For both.
Okay.
Whoever wants to answer. So as I see it, and thank you, by the way, for lots of details, and I was able to follow, and it's looking good in my perspective.
Very good.
So, and I appreciate you guys taking the time to come back to us with the information. So this is how I'm seeing it. In order for the shares appreciation to get to 7 times, or at least to a very good level, we need to have a good PE ratio. And in order for the good PE ratio to exist, then we need to have good performance. But in order for good performance to exist, we need to handle the competition. So really, what I'm seeing is that the key to good share appreciation as per PE ratio is to do well at handling the competition. And what I've seen that is the strategy to handle the competition is to create the unmanned supermarkets, and really to try and somewhat copy what they're doing. So there's 2 questions now. Is that the only or the main? Is that the only strategy to handle the competition? And also, the second question relates to this. You talked about an app being used. So the app would actually then should be able to reflect how many people are engaged with this unmanned project, unmanned shops. So I wonder if you have figures on how many people have downloaded the app and how the app usage is being implemented.
Okay, very good question, Angelo. Okay, I'm impressed with this question. But don't get swell-headed. I'm impressed, but don't get swell-headed. Okay. There's actually the third weapon. But the third weapon is the third sword. But this sword is not sharpened yet. That is an online charity supermarket. Now, before I talk about the third sword, I want to talk about why our 24 hours unmanned shop has a better cutting edge over Jack Ma. Let me explain to you. Jack Ma shops, they are all unmanned. They come with various sizes, some big, some small, some like a kiosk like 7-Eleven, small 7-Eleven. But they are all unmanned. But they are shops that you have to get into. That means you have to literally search for them, find their location, and visit them like a destination. Whereas our shop, our kiosks are portable kiosks. We don't create infrastructure and say that we are located at, say, CBD, between this block and that block, between a central bank and what monument. We don't do things like that. We search for the most densely populated housing estate, common people, because we are dealing with common people. We're making money out of the common folks, and put our kiosks right at the housing estate, whereby it is only a distant walking. Even at the middle of the night, when you want a Mars bar, you can wear your pajamas and your slipper and walk to the shop. You don't even have to bring cash. I already have shown you the thing already, the technology. Just bring your mobile phone that is connected to your payment system, the Chinese payment system, which 99% of Chinese has it, and scan the product at the barcode there, and then your bank account, which is like debit, will be deducted. Then the can of cola or the Mars bar will drop in front of you. So another word is that we literally have more convenient than Jack Ma. This is our cutting edge. We literally have more convenient. Okay. Now let me talk about the third SWOT. Remember I say the charity supermarket? Meiyue share that you guys have subscribed into it will subsequently be a combined share with J66 and Meiyue. That means on the day, on the fourth phase when we go public listing, Meiyue and J66 will combine. It will not just be Meiyue, it will combine. Because J66 has got the sales volume of the actual store that you can shop in. Meiyue currently still do not have enough sales volume. Reason is because in order to have the a charity supermarket online, you need to have many stalls because you can fully activate on it. Why? Because China is very big. When you go online and purchase, let's say for example, a bottle of soy sauce and say a dozen eggs, what do you want to do? You want to cook on that day. Can you wait for 3 days for the eggs and soy sauce to deliver to you? If you buy a watch, you can wait for 3 days because no problem. But if you want to cook an egg, you can't wait for 3 days. You don't have the patience to wait for 3 days. So the online supermarket is directly related to the number of supermarket that you have physically. The more supermarket that you have on the ground, the more you're able to utilize the nearest outlet that is closest to that particular order, that order the eggs online, and use the closest outlet to the person to send to that person, so that you will minimize traveling time. That's why the third SWOT is not sharpened yet. But with 1,000 outlet coming out, 1,100 outlet coming out, the third SWOT will get sharper and sharper. And by then, that's why even after the fourth phase, there is the fifth phase. The fifth phase is the evaluation is going even higher. Those who can even wait at that stage, that means, yes, they can sell at a PE ratio of 7 times, but they don't exit. They even wait for the online charity supermarket to mature and sell at a fifth phase.
You have to look at the 5-year plan, because the 5-year plan actually elaborate on the future.
The 5-year plan was given to you guys on the attachment already. Okay, so all these things are all not just a projection, but a strategic projection that we have done. The current hiccup that we face is just that the 24 hours unmanned thing that give us a little bit of a hiccup. So do I answer your question, Angela?
Yeah, you did. The only thing that you haven't, and thank you very much. You've done a good job at that. So the only thing is the apps. What about what's happening with the apps? How's the public engagement?
The apps of public engagement, so far, we still do not have the data yet. The data is not given to us yet. Are they collecting the data? I think they are. The reason is because they are quite diligent with that. Until once when I have the data, I can get back to you. Now I do not have the data.
Great.
Okay. Agnes, are you with us?
I'm here, yes. Thank you.
Okay. So far so good.
So far, so good.
Okay. Right. So so far so good. Tomorrow we will be conducting another session. Rama, you just joined late, right? You just joined late, correct? Who is that? Is it Rama?
Yes, I'm with a friend. We joined like 15
Okay.
minutes late.
Yeah, Rama, I will encourage, because you came so late. You know, the initial part is the explanation is very important. Can you kindly just join us again tomorrow, so we can start from scratch
I
for you
will
again?
try.
Sorry.
We're having problems with the signal. It's very low. It cuts and comes back. So I will try. If the signal is good, we will try.
Okay, maybe you should shift location to go to other place with a higher signal.
A co-worker place, yeah.
Yes, please.
Okay, probably
Yeah,
I'll do that.
go to Akasha. They have good signal there.
Okay.
Okay. So yeah, if you can
Thanks.
join us. Okay, Carolyn, you have any more question for us?
Okay.
No, thank you. And I should go now.
Okay, right. So everybody have got a good weekend. Tomorrow will be the same time. If you want to join us, please join us at the same time. Thank you.
Thank you very
Thank you
much.
so
Henry,
much.
anything?
Yeah, thank you very much for attending and the question that you put forth. I hope well we all benefit from this venture. Feel free to call us anytime when you have a question. I will try my best to provide you the information.
And lastly, Agnes, I think you have certain things that you want to sort out with me. I just happened to read your messenger just only this morning, so we will continue to communicate through messenger. And also, Angelo,
Yeah.
I will appreciate that you give me a call. Give me a messenger call in this couple of days.
Okay.
Yeah, couple of days, and then we talk it out.
Sure. Okay.
Okay. All right. So Rama, I'll see you back in Bali very soon. By next week, I will be back to Bali.
Okay. Good night, everybody.
Good night.
Okay,
Okay.
bye.
Good night.
Good
Thank you so
night.
much.